like it's doing well again pre-market, so pretty happy about that. I did not do a trading journal for yesterday, so I definitely need to get that up and get going on that. Because I did take some trades yesterday. Good morning, good morning, good morning. Add the loss tag on here. T got in here. Massive drawdown yesterday, guys. I did exit T-God. I did get double filled on that. It is unfortunate, but it is a reality. I have to trade in the real world. So that drawdown is there. It's about 17,000 drawdown on the account. But I did take the money that I freed up from that and put it into Zomedica. So 213, 8,000 shares. My entry or my DCA on it right now, my average cost is 237 on it. And I'm currently holding about 55 grand. I did, Lysiana. I got rid of T-God yesterday. Oh yeah, that was on a huge loss. It was about $17,000 the loss. The double fill was unfortunate that I got on it, but it is what it is. So I just closed out the position and moved on, so I wasn't constantly staring at it. That's going to screw with me for sure if I keep that up, so I've opted to just scrap it. Yeah, man, go Ducks. ATRS just had its earnings call. I don't know that I'm familiar with ATRS. Steelman, 4 months in a row. Let's go, let's go. Okay, trades. None for the day. Guys, looking at tip ranks, I did update my tip ranks, so that is there for you. You guys, as always, can check that out over here. Let's go to the portfolio. Good morning, good morning, good morning. So you guys will see that even though I am down 4% last month. This hasn't updated, obviously. This will show that I'm down significantly for this month as well because I actualized the losses on TGOD. But right now I'm 65,000 of 323,000 investors. This has really taken off. This was 160, 150 when I got started, and now it's 323,000. So I mean, I'm in the top 20% of traders on this platform, which isn't bad. Still, my 12-month return isn't accurate because it doesn't take into account everything that's before that. But as soon as we get through May, that will be accurate. We will have a solid 12-month return up there. Return year-to-date returns still are 196%. So we're doing all right. Not sweating it too much, guys. I think the position in Zomedica is going to be a big one. I don't think it's a 10-bagger, but I think that it should reasonably head towards $8, $9. And at this point, if we can get it to do that, be about $165,000 play profit. So not really sweating it. That should be fine. It'll completely recover anything that I lost and more. So into the end of month, Zomedica is looking quite solid for me. I'm going to hold on to that. FTOC, guys, it did get an upgrade. I am a huge fan of FTOC. Payoneer, I think it's going to be really, really solid as we head into the open on that. We do have SNDL still in the portfolio. That did not go anywhere. SNDL I will hold until legalization. Other than that, guys, it's waiting until the end of the month. So just like always, what we're going to be doing here is I will open it up after the initial market open to you guys. You can throw out some tickers. I'll go through the list, let you know what my thoughts are on it. And that'll kind of be the method to this madness for the next month until we start to see movement in the portfolio and I start actively taking trades again. But until the end of March, this is kind of what is. I don't see myself moving things around much more. So Goni, thank you for the follow, man. Holy33, thanks for the follow. Let me know, guys, how you found the stream, what it is you trade. Would love to see what's going on. You can tell that the market is dying down a little bit as far as excitement goes. I think obviously we're going to see some hype if the Senate does pass the bill on Friday. It sounds like they're going to bring it up for review on Wednesday. We should have a vote by Friday. They'll send back the revised bill to the House, which should be voted through by the end of next week. Hopefully they will be able to beat the deadline of mid-March for government payments, and all will be well in the world when the stimmy checks go out and things will get insane again. But for right now, let's see if I can get... We've got 56 people in chat, so let's go. I didn't update Roach Pope. What's up? What's up? What's up? I didn't update Marbles last night because it said it was going to take 3 days. So let's go with, I see 56 viewers in chat. So we'll do a random number generator 1 through 56. Guys, go ahead and just throw your number. You can only pick once. First number that you put in is your number. All right. Good morning. Good morning. Good morning. So only one number. Throw it in there. I will give you guys a couple of minutes. I'm going to run down and grab a coffee real quick, okay? And when I come back up, I will roll it. Twitch recommended. Didn't know you streamed. So you used to hear your voice on Stocky Teeny. Nice. Nice, man. Yeah, I stream very briefly in the morning. I stream till probably around 10:30 in the morning. So, yeah, coffee. I'll be right back. All right, let's roll it. Number eight. Number eight. Do I have a number eight? I don't see a number eight, so nope. We go again. 16. Nope, we go again. 14. Oh, we have a 14. Cobbler, you pick. Cobbler picks. Harlan, I know you picked it too, but Cobbler got it in there first. Oh, Mikey, that's so funny. All right, Cobbler, you pick the ticker for the day. We can watch whatever you want. Let's check out pre-market runners and see what's going on there. What do we have as far as pre-market runners? Stocks, pre-market. ZOM, you got it. All right, top runners pre-market. Communication Systems, NNDM, Great Elm Group, Strata Skin, and Wayside are the top runners pre-market. Sundial is on this list for volume, almost 6 million volume pre-market. SOS is here with 7.4 million. I don't see Zomedica on the list, but that's okay. Zomedica. We'll do Zomedica. Also, guys, we can start the list for tickers now. Let's go into stream tickers to watch. Let's go through this and trim everything that I didn't like. FTSE better, so this can go. Workhorse does not sound like it's a healthy play, guys. I'm not going to go anywhere near that, so that's out. INND I didn't like. I love this. This was good. I didn't like this. I didn't like this. I didn't like this. This is a long-term hold play, so that's no good for me. Wastewater patented tech was a potential play. This is a SPAC play. I'm not watching that. No filings don't play. 3D printing metals, it's interested, but it's an emerging tech. It's a nice hair day. Thanks, man. We have no idea yet when we know about orders. Long-term hold, not interested. WPRT, I like still. Could do it all. I didn't like. Outlier 5G, I'm not a fan. Play it like a SPAC, don't need that. China, lots. Cars is better. FSR, no care. Okay, perfect. Okay, so we're looking at Fubo today. We're looking at PWR. We're looking at Rocket. We're looking at. I won't know until I take a look at it. I know that Berkshire is bullish on financials, mortgages, and insurance right now, so it may just be a good earnings play. This idea that the entire market thinks that everything that moves now is a short squeeze is something that I think we need to, as a community, or myself at the very least, needs to just kind of get out of. I need to abandon that line of thinking. Everything that moves is not a short squeeze. I Command V, tier 1 sub. Let's go. Thank you so much, man. What else we got? QCOM? Yeah, Qualcomm. It's been a while since we looked at that. We can take a look. Anything else? Any tickers that you guys want? Yeah, I've got AWK there. Subs. Yeah, we can look at subs. DGLY, they got that order today. It's not a huge order, but it's something. LAC, I like it. I like it. POTN, AQB. AQB I've played before. POTN I think is new to me, but happy to take a look. And TX is a thorn in my side. Hitty, yeah. Can definitely do that. ACRX, yeah. POW. Z. N. The list can be as long as we fill it, guys. But once I lock down the list, we're locked down for the day. Okay. Um, More than happy to run through all this. Clove, I really like Clove. Long term ATRS, yep. PDAC, Visio, SE, Plug, IDEX, HIB. So understand, guys, that when I do this, I'm more than happy to look at any tickers that you guys throw out, whether it's here or YouTube or LinkedIn, Facebook, Twitter, wherever I can see the chat. If you guys throw out a ticker, understand what you're getting from me. And this is a full disclaimer here, guys. I am in no way a financial advisor. I'm not providing you financial advice. What I'm going to give you guys is my opinion on the stock as though I was going to play it, okay? And what you need to understand there is what I am looking to do is just help you guys understand what my thought process looks like, okay? You guys need to come up with your own trading methodology. This is something that I often stress over and over and over again. I'm just some guy on the internet. Don't listen to me. But the opinion might help you get some gears going or connect some ideas that you had in your own mind, and that's useful. I am a huge advocate, guys, for you creating your own trading methodology. So know why you trade, what you trade, and how you trade it. That reading list there, guys, are books that I have read that have helped me craft my own trading methodology. I only add books to the list that I think bring value. The latest book that I read was The University of Berkshire Hathaway. It was 2 authors that had attended every single Berkshire Hathaway annual meeting for like 30 years. And they break down the best bits from those events every single year for you, and every chapter is a different year. It was an absolutely amazing read to see how Munger and Buffett reacted ahead of time to things that were about to happen. So, Sens, yeah, I can throw Sens on there. Highly recommended. Be right back buying the whole list. As always, guys, I do recommend that you start with this culture code. Reminiscence. Holy crap! Memories of a stock trader. It's reminiscences or something. I don't know why I use that word, but he did. But that's definitely one that you should read afterwards. What's the name of the book? The first one is Culture Code by Daniel Coyle that you should read. If you want to be a qualitative FA trader, this is going to help you understand how large groups of people think, move, and react. And then the next one is Reminiscent. I don't know how to spell this right. Of a stock operator. And what's amazing about this one, guys, is it's telling you about stocks from how the market worked back from about 1890 till 1930. And what's amazing to see is how similar the market environment was back then to where we are currently right now today. I'd say we're around the 1910, 1915 kind of area right now, where we're seeing never seen before affluence and growth in the market, and everybody thinks it's just going to continue forever and ever and ever, but there are whispers of, oh, things might not go well. So those would be the first 2 that I start with, guys. Culture Code is only really going to be of value to you if you are an FA trader. If you're a TA trader, it's going to be of absolutely no value to you whatsoever. Reminiscences of a stock operator is good for everybody generally. So if you are somebody that knows that you are a TA trader, you might want to just start there. After that, guys, it's really take your pick, but Unknown Market Wizards would be one that I highly recommend next. Yeah, but that list is there. It is another way that you guys support the stream. Huge shout out to everybody that is grabbing those books. I do see you guys actually reading. Crazy, right? Retail traders reading and learning. It's absolutely amazing. They said that it couldn't be done, and yet I see the commissions coming in, which means at the very least, you guys are buying the books and putting them on your shelf. So I would hope that you actually read them. There's a lot of value in them. Now, most books, guys, I read at least a book a week. At least a book a week. Sometimes I do 2 or 3. Audible is often what I do listen to them on. I listen at 1.5 to 1.7 speed, depending on how quickly the original reader is, so I can get through them. That comes from years and years of working with executives, guys. Most executives that I knew read at least a book a week. There were some executives that I knew that read a book a day. Buffett uh, Buffett credits his success in the market to his constant learning and his constant reading. Yeah, man, this is from back in the day. This is 10 years old now. It's got paint on, it's got stains on it. I got to get myself a new Ducks. I might get a Ducks jersey or another Ducks sweater, but I'm a Ducks fan. Have been since I was in the States.
I millennial. So that video I posted out, I think I learned a few things. It
Yeah.
just so far. So it has 181 views or 179 right now. It has about 14 hours watch time. This is the best performing video I've ever had. Um, what other stats do you think is relevant that I should read to you? Because I can read the impressions. I got an 18,
No,
19%.
none of that matters. View
What
time is
matter?
everything. Your retention
View
is
time.
everything.
Where do I see that?
Okay. So you're gonna go into your analytics. Hold on, I'll pull it up on stream here and you can see what I'm doing. We're gonna do a real quick marketing thing here, guys, so I can help Redemption figure out this data. This is this isn't the Mighty Ducks. This is the NCAA team for Oregon University. Okay, so you're gonna go into your analytics,
Okay.
open up the whatever video it is that you want to look at,
Okay.
and you're gonna see audience. Oh, oh, where is it? Overview. Average view duration.
Average view duration is about just under 5 minutes.
Okay, how long's the video?
13 minutes.
That's really good. Okay, so
Okay.
anything over 20, I would say is really solid.
So
Anything
this
over
is about
20%.
average percentage viewed 35.1%.
Okay, and then when you pull that up, you're going to see key moments for audience retention. These dips tell you when people start to take the door. So for me on this video, at 1 minute, people take a dip. Whenever you see this spike back up, it's because people are jumping around to kind of figure out where the little tidbits are. Um, but these drops here help you understand. Like there's an immediate drop here, so I could go to this part of the video and figure out why people are exiting, and then make those changes in the future. But this is the biggest thing: is
They
your retention.
they seem
Market
to
is
not want
open.
my they seem to not want my opinion, but they want to know why. It seems like that, and then uh, they don't care too much about the technical aspects. They just want to know why I think that they would get screwed, but not my
Alchemist, no, that's
opinion.
YouTube. That's YouTube. I am a partner on YouTube as well. So I'm a partnered YouTuber. I am a partnered Twitch streamer. I'm one of the few that has access to LinkedIn Beta, LinkedIn Live Beta. Um, yeah, I kind of all over the place.
I think that my theory currently is that other than the hate watching and stuff like that, right? I think that my theory should stand is I shouldn't upload on Sunday. I should upload on Saturdays because when these guys have the entire weekend to stew, I noticed that if their stock is down or whatever, right, or it seemingly shot up, I don't know if it's up or down, but like I think my theory is that more so for the downside fear, they're gonna start searching for everything, and like they're gonna search for reasons, obviously, like to rational why they should stay in or whatever the opposing opinion is. I think that's the target moments when I should actually drop something like on Saturday, especially, or Sunday early morning, because the peak of my stuff came right before the end of Sunday, and even when I did the second push out on Monday, the second push out on Monday didn't really have too much effect, as if like when I posted it on Sunday afternoon. Sunday afternoon, like it just kept like it was steady, and I didn't even like I only pushed it out once on Stock Twits, and it just kind of died down. But that's just the theory right now.
Yeah, outlaw commute. So a community tab only really starts to take effect once the algorithm has learned who it is that's watching your video. So you actually have to put out videos that are pulling in views. I know with my analytics, this is good by the way for Zemetica. I was just pulling up what it looks like for the past year, guys, on the weekly. So it started the year at about 20 cents, and right now it's 2.11. So it's doing all right for the days here. It's retaining its gains. Like this isn't huge profit taking here. That it's still up around 210. Especially given that if we look at it over the past 10 days, it declined at one point down to about 130. This was before Powell spoke and then came back. So My only thoughts on stock videos over the weekend is that a lot of stock traders check out over the weekend. I think you're better off posting on Mondays.
Well, I meant more for like because I don't care about the stock specific people, right? I just care about the normies who have kind of flooded in and who are not like essentially tempered by the stock market already. Because I think that the what was it? I'm not looking for the specialized audience right there, right? Because they'll argue, they'll refute some dumb shit like, oh, the 20 SMA or something like that. I'm looking for the regular normies that are just there for the uh, I guess the
The
emotional
DD, yeah, they want
feelings.
somebody to do
Yeah,
the DD for them, and that's
yeah.
why I'm saying Monday morning pre-market would be a better time to drop that, because if you drop that, let's say you drop that at 8 a.m., right? My
Mhm.
average is 237 right now. If you drop that at 8 a.m., that's when most of these normies are waking up to. And by normies, guys, that's a term of affection, because that's me, that's you guys, that's retail traders. We're the normies. I'm up a little earlier than that doing my DD, but if you drop it, if you post that at 8 a.m. every Monday, your breakdown on whatever the next hottest stock is, that's an opportunity. I think that's more likely to get more views and more retention, especially if it continues to be a hot stock throughout the week. Because what you'll have done is you'll start the week when it's popular. It will grab the people's attention, and then your viewer retention through that is going to result in that video getting bumped up for that search term, and then that will carry throughout the week. That's just my opinion. So,
Because
Alchemist, I can definitely talk about my stock scanning criteria. So when I'm looking for a stock this year, for those of you that are new to the stream, I let the stream set a target for me for the year. So last year we took 2,200, and well, I took, you guys got to spectate. I took $2,200, turned it into 50 grand. Started the year with 50,500. What I have done is allow the stream to choose a $500,000 target for the year. So I'm looking to take 50 grand to 500,000. Current portfolio value as of Monday, as of yesterday, was 95,000. Now I did take a huge actualized loss yesterday. As of right now, the portfolio is only worth um, 90 grand. The total book cost on it is about 107. So Clove is dead. What makes you say that?
also like because my original plan with this millennial was that to release it around Sunday afternoon or so, especially if I was to target someone like a fanaticism stock, right? Because right now it's the market's all about fanaticism. So if I was to target those stocks, be the anti-contrarian, and actually give good reasoning, they're not going to stay there for good reasoning. They're going to be there because they want to hate watch. And then I would be like, as soon as it gets posted, I will do a plug on StockTwits. But then that was also the secondary approach that I did on Monday. I plugged it in right before market open around like 8:30 or something like that.
Okay.
It didn't get as much views or retention or like anything like that. That's why I was targeting the weekend.
Yeah, I put money down that if you consistently post your videos Monday 8 a.m. right before the market, you'll be fine. So guys, yeah, they set the target of 500K. So for me, that means that this year, and this was where I was getting to on this Alchemist, was this year I'm focusing on a major growth portfolio. So I'm not looking for a long-term hold. Most of the plays that I'm taking are short-term gains, looking to flip. So anywhere from 4 to 6 weeks. That's kind of what I'm looking at, is a play that's going to play out in that time period. So in reality, I've set myself 8-week goals. Okay, so when we originally did this, I set myself goals. Where is it here? Road to 500K. Okay, so what you'll see here is goals that by the end of February, I was hoping to be at 100K. Current book value is about 107,000 in the portfolio. Hold on, let me close this down so you can see what I'm showing you. So what we've got here, guys, is by the end of February, I was hoping to be at 100,000. Right now, the book value is 107,000 on the portfolio, but the actual value is 90K. So I'm about 10 grand short. I'm okay with that, though. So my hope is that by the end of March, Zemetica will run to the $8-10 range, and that will actually clear my goals for both February and then April, May. By the end of May, I'm hoping to be at 200 grand. By the end of July, I'm hoping to be at 300 grand. By the end of September, I'm hoping to be at, or sorry, by the start of September, by the start of July. So by the end of June, by the end of August, End of June, I'm hoping to be at 300 grand. By the end of September, or by the end of August, I'm hoping to be at 400 grand. And then by the end of November, I'm hoping to be at 500 grand. If I'm not at my target by November, that's okay, because then I'll have that month to finish off the year strong and try to make a play. So that's really the way that I'm breaking down. I know that seems oversimplified of like, yeah, sure, you're just gonna make 100 grand every 2 months, no problem, right? But that's kind of the target. As of right now, we are pretty close. So we started the year with 50 grand. Right now, book value is book cost, I should say, is 107 grand. So I am over that 100K target for spending. But why am I so confident on Zomedica? What did I start with? I started the year with 50K. Last year I started with 2 grand. So in a year and a half, I've taken 2 grand to almost 100. Well, we'll call it 100 grand. So let's get down to the tickers. Paper trading? No, this is real money. I never do paper trading. Huge thank you, by the way, to the new follows, guys. Let me know how you found the stream, what it is you trade. I don't paper trade. I don't believe in paper trading. I believe in it. I know it exists. But one of the things that I learned long ago was if you don't have skin in the game, you pick up bad habits real quick. So for me, I always have skin in the game. It's always real. If you see accounts on this, it's always real. My issue with paper trading, guys, is there's a lot of people that go, well, you should paper trade before you get into the real market to understand how the market works and buys and sells and all that. And it's like, okay, sure. But you can honestly learn that pretty quickly, especially for my strategy where I play long equity. So like it doesn't take a lot to learn buy and sell. Right. Okay. Alchemist, thank you for Alchemist is keeping me on track. So given that I've got these targets, guys, I have to set those targets of 4 to 8 weeks. So what I'm looking for are things that are trending in the social sphere. So I'm looking for news, headlines, things of that nature. So anything that is trending as far as volume is very useful to me. So StockTwits, going to StockTwits and finding things that are moving in a big way, things that have a ton of watchers on it, things that are really being talked about a lot. So you can go to the rankings here on StockTwits, find the most active stocks. So these are the ones that have the most conversation going on around them. And this could potentially be a play in here. You would take a look at these watchers. You can go in here and take a look at these. Another thing that I do is I check the, let's go over here. Let's go here. Pull up this. For SPACs, I use the SPAC tracks. For breaking news, I use Twitter. I think Twitter is actually a very underutilized tool, but this breaking section can give you a lot of news. One of the best trades that I took this year so far, other than AMC, was DGLY off of Twitter. We got news that there was riots on Capitol Hill. I took a DGLY position immediately. It ran very nicely, 30 or 40% in an hour and a half for me when that happened. So that's another place where I get my stuff. I share this openly, guys, because I don't care if you know. My ability to trade, my edge isn't that I see the news, it's how I connect the dots and put pieces together. So other sources that I'll use are routers. I do like to create custom RSS feeds for specific tickers that I'm looking at, so I get all the latest news on what those are. I do have an RSS feed set up to pull from Edgar, which is the SEC search group. So that's another place I get my news from, is the SEC directly. Trying to think. Seeking Alpha is another place that I look for breaking news. So that's definitely there. Going through this and seeing what's happening in here. Occasionally this will slip something. Once it's made it to StockTwits though, or Seeking Alpha, I find that the news is late getting here, so the move has already probably happened. So basically what I do is I just read a lot. My day usually starts around 4:30, 5 o'clock. I then read for a couple of hours, get my plays for the day, understand the direction of things that are moving, and I make my plays off of that. Now, if I see something of interest, so here, this is of interest, okay? So what play would you guys want to take on this? TripAdvisor stock rallies after city upgrade. Let's run a hypothetical. Hypothetically, which stocks do you like off of this news? Okay, airlines, that'd be one way to go. Sympathy play, something like Sabre. Yeah, Sabre would be a solid play in my opinion. What else we got? Hotels, travel, other travel booking sites, Meet Popsicle. That's where I went. Airbnb, yeah, Airbnb wouldn't be another solid play. So this is the kind of thing that I do is I don't take the direct news. I look at, okay, well, what does this mean for the industry as a whole? If City likes TripAdvisor, what else do I know that's in travel bookings that I think is going to do well? I know that Trip.com has their earnings this week. So what I'm looking for is Trip.com is up a little bit today, but not a ton, right? So for me, what I'm looking to have happen here, I want Trip.com to actually screw the pooch. I want them to suck on earnings hard. And I honestly think that, let's go to Earnings Whisper and see Trip.com. Okay, so I expect it to miss. So 44% expect it to beat. So there's more people that expect it to meet or miss. I expect it to go up from here, which is in line. 63% expect to go up from here. So what I'm hoping to see is earnings come out, they miss, it declines. I would look for an entry. I'd take my entry and then hold this for the next 8 weeks. That would kind of be where I'm at. And I know that once the stimulus passes, these travel sectors are going to get a ton of cash injection and these stocks are going to go up. But that being said, on the day of their earnings, when it says Trip.com misses, I do expect it to decline. So that's kind of how I would craft my plays. Hopefully that makes sense, Alchemist. How I do that. And what I love about this is that comes in a whole bunch of different ways. Like, well, how did you know Trip.com had its earnings this week? Well, because that's another thing that I watch, right? Like, so all of that information from the hours of staring at the internet and reading and stuff, it's all in there, and it kind of just, some of it is that, some of it isn't that, some of it would be the bio calendar, right? So I go to the biofarm calendar, biofarm catalyst. I wouldn't look for a parallel move. I would be looking for a specific ticker. So I know that when the PDUFA is coming in, I know that stock is going to buy up to that. So there's a PDUF date of March 2nd today on KMPH and AQST. So let's see how those are doing. AQST today up a little bit. And then what's the other one? KMPH. Yeah, KMPH is up a little bit too. So what I'm actually going to do is I'm going to head over here, and I'm going to go here, and I'm going to go here. Okay, so 20 by 15. 150? No more than that. Let's go 250. 300. Okay, so we'll go. Where is my trading journal gone here? Is this it? No, that's not it. That's not it. That's not it. Did I close my trading journal? I must have. AQST, 300 shares, 525 average. SNDL earnings March 17th. Interesting. That one's going to be all about the guidance of what they're going to do with that $700 million, I think. Entry on PDUFA from FDA. IDKR is good. I do have a short account that I could be using, a US margin short account. I just don't use it. Um, Yeah, so I mean, my trading journal, guys, looks very different from a lot of people out there. In the same way that your trading methodology is going to be unique to you, so too should your trading journal be. There's a lot of people that trade have a lot more information as far as dollars and cents and how that played out and percentages and all that. For me, because I trade on psychology, psychology is really at the forefront of what I'm doing. So every day I start with my sentiment. What's my mindset going into the market? I want to make sure that my mindset is good and I've acknowledged kind of where my head is at. And then I finish every day with a psychology. So kind of what was my thought process at the end of the day, so I go back into the next day looking at that, right? So yesterday I accepted the loss on the trading error. Okay, so I know in my mind that means that I got out of T-God yesterday. I've got kind of a blank slate. I'm feeling good. I've got a good idea. I've got a good sentiment. So now I'm bullish now that T-God is gone, and that's kind of how I'm going into the market today. CRSP, yeah, that's a good idea. Let's get down to the tickers that you guys gave me here. I'll add CRSP to the end. And let's get going. Fubo, first up. Okay, Fubo. Fubo TV, guys. TV streaming platform for live sports, et cetera, et cetera, et cetera. There's lots of live sports plays to be had. I don't see any reason to pick this one up over anybody else, given that it's $40. Honestly, my content creation play that I'm looking at is CIDM. So for me, my answer on Fubo is CIDM. PWR. Now, CIDM, guys, is not a live streaming platform. They create the content, but it's the same kind of industry in my mind. So I would play CIDM at a much lower cost and get a lot larger sizing as a result. SDC. Okay, guys, I am going to cap this now, though. So I won't be adding any other new tickers to the list today, but we will go through all the tickers that are on here. Okay, so I promise you that I will get to all the tickers that are on this list, all right? King of the Deep Sea over on YouTube. What's up, man? What's up? What's up? Okay, so PWR, Quanta Services, contracting services, United States, Canada, blah, blah, blah. Electric power infrastructure. That's a buzz term for sure. Into stimulus, they'll do well. Their forecast is 12.8 billion. That's an 84 share stock. So for me, I'm not really interested in this. Because of where it's at for pricing. I'm not saying that it's a bad company. It's in a great sector. Stimulus will help it. It's a potential options play, but for long equity, I can't get the volume that I want out of this, so I probably wouldn't take a look at it. A similar play that I would probably take a look at on this would be Fuel Cell. It's a similar sector, or Fuel Cell or AMTX. Would be the equivalents that I would consider trading. It's not that it's a bad play, Highlander. I think that there's actually great opportunity in that. That sector is going to blow up in a big way, especially once the stimulus money starts flowing in. I just can't. I can't trade something that's an $80 share. It may be a potential options play. It could be a potential long-term hold. If I had more of a long-term portfolio. Berkshire is going to be big on infrastructure and utilities in a big way. They already mentioned that. So PWR doesn't look like a terrible play. I don't think it is. It's just, from my perspective, is not something that I would trade. Okay, Rocket. This one's been a huge talk. Oh, this is not Rocket Mortgages. Whoever asked for Rocket, did you want Rocket Mortgages or Rocket Companies? Oh, this is the parent company for Rocket Mortgage. Okay. Financial sectors and loans is going to be big. I'm going to leave it on the list though, because there are equivalents that go the other way, and I do still want to speak to CRSP because it is a very solid stock, and I do want to give you that insight. You're here in chat, you're listening. I'm more than happy to still give you insight into it. It's not that I'm going to just discount it and disregard it. I'm still going to take a look at it, break it down, give you my thought on the industry and its place in that industry, but I'll also give you an equivalent that I think works better for somebody that has somebody like myself who's working with smaller amounts of capital. Now, with Rocket Mortgages, loans, etc., what you have to take into account, guys, is December, 16 billion. They are forecasting themselves a decline in revenues, a serious decline in revenues. 16 billion so far this year, and they're forecasting 11 billion 2 years from now. So, not even Rocket is really bullish on Rocket. What would be my equivalent to this? I think essentially what you're trying to do here is play the loans and business. or the mortgage sector. So for me, maybe Redfin would be something I look at. It's pretty expensive. Mm, Lemonade's already run, right? Yeah, Lemonade's huge. All right, here it is. Here's one that I would consider instead. Loan. Manhattan Bridge Capital. They provide loans specifically for real estate, acquisition, renovation, rehab, enhancement of properties in New York Metro, New Jersey, Connecticut, Florida. Um, Loan would be the one that I look at. And this is actually down right now. Over the 5 years, it was as high as $8. It's sitting at 5 right now. So that would be one that I look at. Um, Ock. So this is a water play. Again, this is a utilities play. I don't hate it. Water's going to be quite good. What you're looking at is their estimated growth. It's very, very stagnant. This is kind of sideways. I just took an entry on AQST, so I've got a 525 average. I think we see the PDUFA go through. So I'm happy to enter here. I'm down $30 on it right now, but I honestly think that it's going to continue to run. SNDL is up nicely today, 146. ZOM is up again today, so I'm up another 4%. So you guys remember last week when we did the movie theater metaphor? Everybody remember that? The movie theater where the guy yells fire? So that metaphor, guys, I was the guy sitting in the chair, staying calm, and I'm not going anywhere, right? Um, Remember that I was down almost 28%. Okay, I was down almost 28% last week in this portfolio, and now I'm down 14% in the portfolio, 13% in the portfolio, and it's slowly coming back to me, right? So for me, this is how I trade, and it really does take. You guys want to joke about diamond hands? This doesn't take diamond hands. This take diamond cojones. Like you have to have them balls of diamonds, and you have to be willing to just like stay hard as long as you possibly can. Um, you have to be willing to see that. You have to be willing to see your portfolio where it is and understand what's going on. Has your DD, your fundamental, changed? Did my DD on Zemetica change? No. Did my DD on SNDL change? No. Did my is Payoneer still going to be a massive fintech play? Yes. So why would I run from any of those? Nothing has changed. Yeah, but you could have got a better entry if you had exited and got back in. Sure. If I constantly want to be playing with my portfolio, but I mean that's rude to play with your portfolio at the table. You know what I mean? Like you don't count your chips while you're still sitting at the table. If you guys haven't seen The Gambler by Kenny, you need to go check it out. Right? No one to hold him, no one to fold him, no one to walk away, no one to run. It was not time to run. Nothing had changed. It was not time to walk away. Yeah, rip Kenny Rogers. Abaz, whoa, 1,000. Why you sold T God then? Bad FA. T God, I was double filled. Rezo. So I actually had an error with my platform that double filled me on that position. It was a position that I was 50-50 on anyway. However, the double fill had me over leveraged into it, and that was money that was sitting there that I could be otherwise using. Zom's Dong, yeah, I see it. It's up 3,600 today for me. And it's just going to keep going on March. So um, go to the big sheet. You guys want to see Zom? Minutes. So there's the Medica today. It's doing just fine. How's SNDL doing today? SNDL doing just fine. Like I'm okay, guys. I'm gonna be just fine. I got plenty of kookaroos. You know what I mean? I got plenty of kookaroos. Um, so yeah, with Awk guys, it's a utility play. I got nothing against utility, but again, this would fall in my journal under AMTX. AMTX is really the AMTX or fuel cell are the utility plays that I'm settled on. Okay, XPL. Later, Sean. Later. Keep them. Diamond balls. Diamond balls. Solitario Zinc. So this is going to be a mining company. Acquisition, exploration, development of zinc properties. North America primarily owns 39% of the zinc project in Florida. Northern Peru, 50% interest. Lead zinc. Okay. I typically stay away from mining, guys, because there's so many mines out there. I know that sounds odd because most of the Canadian market is mine stocks, but weed is mooning. Do you watch any market internals? I do not. I trade completely off of market psychology. So, what I am is a qualitative fundamental analyst. Okay. A qualitative fundamental analyst is somebody who trades off of market psychology. So I'm not actually looking at the financials. I'd be a quantitative fundamental analyst. We did look at AUK. For AWK, it's a utility play. I like it. It's a water, but given the price, it would either be an options play or a long-term hold for me. It's outside of my price range, so I wouldn't look further at it. For me, fuel cell and AMTX are my utility plays. Is Medica is still going? Yeah, it's doing quite well. It's a nice day, guys. I made up another 6% on my portfolio today. Like I Yeah, and fuel cell and AMTX would be the ones that I look at. They're not water plays; they're utility plays. But so XPL guys, I've got nothing against this. If we look at their last quarterly report, are they green? Total assets 24. This is in thousands. Yeah, so 24 million. They've got a decline in their assets year over year. Liabilities, they've had a decrease in their liabilities, which is good. Long-term liabilities, they've had a decrease. Um, Net loss, they've reduced their net loss year over year, so that's good. Their cash is getting in a good position. Um, their Peru project is not currently bringing in capital, so I'd look into why that is. Um, their expenses are relatively small. Yeah, it's not bad. C3AI is down on bad earnings. It's not bad. It's just it's mining. I don't really trade mining. I don't like the sector, with a single exception. There's one exception to that rule, and it's one that I played in the past. Um, this was not a Bitcoin mining company. This is an actual raw materials. LAC is the actual mining company. Bitcoin that's mining, right? Yeah. I guess I do need to qualify that now. That's one of the reasons why I like Mara, guys. Mara is Canadian based, so they do have the Canadian cold weather to help keep the cost down. As well, Hut is another one that I was looking at in Canada for Bitcoin, and they are in my price range. It's probably a position I will take later this year because they haven't really run yet. So I think there's potential for Hut to catch up and be somewhere in the ballpark of Mara. But yeah, Qualcomm guys, chips. So again, this is a chips play. Qualcomm is up there with Nvidia. It's the semiconductor thing, right? And it's going to be a great play moving forward. For me, I don't have a play in the sector because they're all so expensive. If I was to play something in this sector, low cost semiconductor stocks. What's ASML going for these days? It's a little bit expensive. um, let's go back because this clearly, I don't want one of the best. I want low cost. IVI. 3 great semiconductor stocks under $10. HIMX, ASX, UMC. $14 now, $765. This is just packaging. That's not really what I want. Look at this. Look at this. Look at this run. UMC looks like a great one. This looks like a great play. UMC. Still only at 952. So my answer to Qualcomm would be UMC, and it's good that I have that because I don't have a mining play. Why do I want low cost, higher volatility? So guys, this is one that I've broken down in the past, but essentially what I do to break this down, here it is right here. Okay, so let's say I have $2,000, right? Everyone would say, well, if it moves up 10%, it moves up 10%. So it doesn't matter which stock you put that in, 10% is 10% is 10%. That's true. However, the likelihood of a stock moving that 10% is something you also have to take into account, right? So you look at something like SNDL, okay? SNDL moved 12.5% today. That was only 17 cents it needed to move to do that. I think these stocks that are these lower cost stocks are more likely to see these massive movements of larger percent gains because they are so small. Okay. And because they are a lower price stock, I'm able to get a larger quantity of them. So they are more likely to hit the percentage, and I can have a larger holding of them, means that my gains will subsequently also be larger. So what you guys are seeing is here, let's say I have $2,000. I put it in SNDL at 113. It only needs to move 11 cents in order to get me my 10%, right? Whereas UA, Under Armour, when we did this originally, it was 1774. It would need to move $1.70 for me to get that. Disney, I would have to move 181, or it would have to move $18 for me to get that same price movement. I think SNDL is more likely to move $11. Yeah, it's leveraging with cash, essentially, Duck Me Daddy. So that's why you guys see that when I'm pulling these things out and we look at something like Qualcomm, I have to go, that's outside my cost range. It's outside of where I'm willing to spend money because I can't get the size of it, right? Yeah, exactly. I can buy more, and it's more likely to make the movement, okay? Now, you have to understand that strategy does not mean that there's not inherent risk in doing that because, well, yeah, Millennial, that's true. It's more likely to move that direction, but that doesn't mean that directionally that's always true. It could just as easily go against you the other way. Exactly. Therein lies the inherent risk of it. That volatility, the ability to move that quickly percentage-wise, puts your portfolio at risk. And so that's where the DD has to be really sound. You have to be very, very firm on what it is. I usually bat upwards of 85, 90% on my picks as far as win rate goes. So for me, I'm okay to risk it. Ooh, 5 months, let's go. 5 months, Climington. It's been a journey, man. It's been a journey. All right, let's take a look at subs. Streaming services and tech. So subs is an ETF of streaming channels, is what I'm seeing. So strong sector. It's in my price range. I don't hate it. It is an emerging sector. It will continue to grow. Again, I like CIDM better, I think, but I don't hate this. I will leave it on the list. DGLY is an NFL travel. I hate ETFs. I do. I'm not a fan of ETFs. So for those of you that haven't heard me rail on ETFs, the reason why I rail on ETFs is this. ETFs take a whole bunch of stuff, okay, and they shove it together in one package. Now, in that package, to make this appealing to people, they go, "Oh, we're going to take a little bit of this gold down. We'll take a diamond and we'll put it in here. We'll take a little bit of this gold and we'll put it in here, and then we'll take a crap ton of this copper and put it in there, and then we're going to take a pile of dog shit. We got this huge heaping pile of dog shit. Put that right on top." So for me, if you're a passive investor that's not actively managing your portfolio, ETFs are great. You don't have to look at it. You've got a sector covered. You know, pot's going to be good. Utilities are going to be good. Financials are going to be good. Healthcare is going to be good. Great. I'll buy an ETF in each, leave it, lock it, go away for the year, come back and take my gains, right? However, for those of you that are actively managing your portfolio, I think that you can take the time to do the due diligence, rip open the ETF and go, okay, let's wash off the dog shit. This copper can go over here because I'm not really interested in that right now. Let's take a look at the gold and the diamond. Great. Now I've got the gold and the diamond. That's what I'm going to trade. That goes for pretty much everything. Even the SPY. Even the SPY. Why don't you trade the SPY, millennial? Isn't that a great return to just take the SPY year over year over year over year over year? Maybe. But I can do better than that. So let's take a look at how the SPY did last year, shall we? SPY 1 year. SPY started the year 312, finished the year 389.58. So from 312 to 389. So 24% gain. That's not bad, right? That's not bad. 25% on the year would have been a really solid gain for most people. And if your portfolio didn't beat 25%, the question remains, why didn't you just put your money in the SPY? Okay? But my gains last year were 2,700. I beat the SPY by 108 times. Headlines, and social output. That's it. That's it, Fountainhead. I am constantly absorbing headlines, news, trending news, psychology, whispers in the wind, farts blowing up my nose, you name it. I list you guys actually this whole process here is another means, and I should list this as a means of coming to some understanding as to how I find my stocks. Breaking down these tickers with you guys is where I learn, right? There look at the range of sectors and tickers that you guys throw out here, and I get to take a look at these. It's like, oh, this is kind of cool. This is kind of cool. This is kind of cool. There are ones here I never would have looked at that you guys have brought, where now they're on this list for me to go to when I'm considering something, right? So things like Hut, I didn't know about Hut until somebody brought it here, and now I know about Hut, and I'm interested in it. MICT was another one. FinTech and Mobile. You guys brought that to me yesterday. BLGO. That's another one I wasn't aware of. So this is another part of that process of sourcing from a community, your thoughts, your ideas, and working from that, right? So subs is streaming sector. I'm not opposed to it. It's in my price range. I probably won't play it. I like CIDM better just because I can get a larger sizing to it. But yeah, it's not terrible. LAC, guys, this is the second largest lithium mine in the world. This is a long-term hold. This is a 10-year play. But with EV becoming the new hot thing, what size do I play? Typically, I like to play a $25,000 position. ZOM is really moving today. Where are we now? Yeah, I mean 220. That's great. Portfolio is up another 5% today. Pretty happy. I haven't read it, printer. I've got a long list to get through today. I was hoping to get this done by 10:30. It's going to be a real push for me to get done by 10:30, so I won't be able to look at that today. My thoughts on GME are it's overvalued. Anything over $15. That's kind of my thoughts on it. But I am happy to look at that after I go off of the live, printer. I'll put it in my browser so I can take a look at it and let you know. But did you say no? CIDM. CIDM. Renault, all you guys that are following, huge thank you for the follows, guys. It means a lot. I love even more when you guys let me know how you found the stream, what it is you trade, and then you get actively involved in the conversations. Okay, I will definitely take a look at it. I just won't be able to get to it today. Okay. Okay, where was I? I was, yeah, so I just finished subs. LAC is the second largest lithium mine in the world. I continue to trade that. Rhino. It looks French, so I would say it Reno. But yeah, Rhino! Oh, you found me on Restream. Nice, man. I apologize first and foremost for how I act on Martini's stream, but yeah. POTN. Hot Network Holdings. Okay, this is a 1 penny stock. CBD, dime a dozen. Declining revenue. Not a fan. The largest lithium mine in the world is in Australia. But the thing with LAC is it just acquired its mining rights, so it has more room to grow, in my opinion. Okay. Up next we have AQB. This is the salmon play, right? Yeah. So this is a salmon play, guys. It's genetic pooling of salmon fisheries. It's expected to have an absolutely massive year. I do like AQB. It's a massive play, especially in meat shortages globally. I think that this is huge. I think AQB has an absolutely massive potential. Actually, I wonder, are there options on AQB? So many messages. I just want my password. 1,000 notifications. Just want to see if there are options on AQB. There are. Into September. Hmm. Hmm. Why am I so confident on Zomedica? Bio companies on their first item to market do very well. Pet sector is a booming. Okay, so I've got Gap $30 calls for next January. Those are sitting at 385 right now. I do want to get out of this here, so let's go 379. Let's go. I do, yeah, I do see a $10 price target if it's good. Sorry, guys, I'm just trying to get an exit on this, so.
Order filled.
Okay. So that's a gain on that. Let's go AQB. Options. September 10th. Buy 1 at 215. AQB. Let's go 225. Nothing. Let's go 230. Nothing. 235.
Order filled.
Filled. Awesome. And then that leaves me enough money to grab another DGLY for 2023. I've got this at 250. Somebody wants 170. I'm not giving you 170. What if I give you 130?
Order filled.
Okay. All right. Yeah, so the play for me is short term, right? I'm looking forward at the end of the month to be exiting or into April. Okay, so what I did there, guys, as far as the options portfolio goes, is let's open that up. See if I can open up that for you there. Okay, I did exit my gap leaps at a profit, about a 30% profit. And then I moved that into an AQB $10 call for September. That's the farthest out I could possibly get that at, as well as a DGLY call for 2023 at 250. So now I have two of those positions. I have 3 SNDLs at 250 and 2 DGLYs at 250. So long dated options. You guys will see I'm not playing options fast and loose. I try to have them out as far as I possibly can. This is profitable. I should just exit this. Sell at whatever. What did I spent 9 on it? Give me the 12.
Order filled.
Okay. And then Macy's puts. Hopefully Macy's screws the pooch here in the next little bit, and that comes down. But the majority of my options are into January of next year, guys. So I'm not rushing on it. ACRX, I do have 250 call on that. AQB for September. But this gap put, I'm hoping to close by the end of the week. How much did you get filled on AQB? AQB, I got the September $10 call for 235. Okay, let's get back to this list here. AMTX, guys, this is the Sanitizer California methane play. I don't really understand options. What you just said there, I have no idea what you're asking me. I play options a lot like I play equity. Long. I have no idea about options, really. I just kind of go at it. Which is, again, guys, disclaimer. This is why you should not be doing what I'm doing. HITI. I think high tide is what you want me to take a look at here. This is another pot stock, right? Yeah, it's another pot stock. This is retailer locations. I don't know. I just click buy. I buy it and it goes up and then I sell it. Yeah, I mean if I was to pull up the theta on that, hold on, let me pull up the theta. Greeks theta on we were talking AQB, right? AQB for September. The theta on the tens is negative $1. Negative 1 penny, I should say. Here, let me. So down here, I hate that you guys can't see my cursor over this, but the $10 is negative a penny. So the theta decay on this is nothing. The delta is negative 38. Oh, I'm on the call side, not the put side. Durr. The delta is 60. The theta is still negative 1. The theta is very, very low. So yeah, it should be okay there. I for pop plays again, guys. Anything that's not SNDL is the pop play that I picked. ACRX, they're talking about coming into profitability in 2024. I think it's just a strong opioid play through COVID. Military contracts, opioid, yeah. It's a strong long-term hold. Again, I do have options on ACRX into September at 250. Hoping that I see news on it by then. Yeah, I just don't sweat it. So my options portfolio, guys, it's money that's just kind of there. I don't even think about it really. I take these long term plays and hold them. I enter it and hold it, and if it gets profitable at some point, I close it and then I enter another position. And if it's not profitable, I just let it liquidate itself. Net liquidity on this portfolio is 3,300. I started with 500 last year, so started with 500. It's up 600% over a year and a half. That's still decent gains. I'm okay with it. It's nowhere near my equity, but it's all right. POWW. How? Like Batman. Ammo. Ammo's a strong play. Huge decline here. Look at that. Huge. Why does this say it fell to 222? Net loss. Oof. How do you have a net loss on ammo? Oh. There are other gun plays. This is OTC, so maybe not. Maybe don't. I mean, ammo's a solid play. It's just a solid play. XL. I probably wouldn't play it because I have DGLY, and in my mind, that's kind of my defense contract. But XL Fleet Corp. So again, guys, my opinion on the EV sector is that the EV sector, these independent players, are over diluted. The whole sector is over diluted. Sorry, what did I say? They did say 2022. What did I say? ACRX did say 2022 they were aiming to be profitable, not 2024. I think I said 2024. It's not 2024. It's 2022. They're looking to be profitable. So, yeah. Guys, these independent EV, whether it's Fisker, whether it's Workhorse, whatever. Yeah, no, this is. I'm just not bullish on it. I would rather trade a battery, so ABML, or again LAC. Okay, N. I don't see just an N. So the actual buying of vehicles for electric is not what it needs to be in order to support all of these small players. Despite some of the changes being made in the US, they're slow rolling out. I think over the next 10 years, yeah, there's place for it, but all of these guys rushing into the market right now, I don't think that there's not enough purchasing power in the States right now to do this. Nobody's buying brand new electric vehicles from these guys, not in the numbers that they need. So consider, yeah, with the amount of people that are trying to sell these cars and who's actually buying them, when you got big players like Ford, GM, Tesla that are already in there, these new startups, these Fiskers, these XLs, these whatever else that are out there, Helions and Nikolas and yada, yada, yada. The list goes on endlessly forever. Ridetown Motors and you name it, right? There's just not enough people buying them. Okay. Here, I mean, like, it's a small sample size. I understand that before I put the poll in, but at least it gives us a sample size. Okay, you ready for this? Here, let's do it. This, this, this. Okay, 1 minute. Do you now or in the next 12 months own an EV? So do you currently own an EV or do you plan to in the next 12 months buy an electric vehicle? Go ahead and vote on that, guys. I'm interested. Let me know. I want to see what the numbers are. In order for there to be rapid adoption, there has to be a decrease in price. There's no maybe. There's yes or no. Right. So for me, with my growth portfolio, I need to consider the next 12 months. Okay, so we're done. It's in 91%. No. Yeah, until you get an affordable EV, you're not going to see it. Until the infrastructures are there, it's just not there for me. So I think the big players are going to be the first ones to those affordable models. So the GMs, the Fords, the Teslas, I think they're going to be the first ones to market with an affordable EV. I don't think that's going to come from Ridetown or Fisker. I think they're going to be a luxury item. I think they're going to be very rare, and I don't know that they can necessarily compete with guys like Tesla. The infrastructure it exists, but it only exists for Tesla, really. So in the next 10 to 20 years, I'm not opposed to the industry. I just feel like it's over diluted right now. And all of these hype vehicles that are coming in, all of these minor car creators, I think they're going to get bought up or dissolved. Uh, Over and over and over again, I see that the numbers are like this. Um, so for me, that's it. Like Tesla owns their own network, and so that's there. What about XPEV? Even with XPEV, so XPEV is China. It's a little bit different. China does have a network that they're building. Yada yada yada. China's just going to pump that sector for the sake of pumping that sector. But for me, if I was to play that sector, I would again. I'm not going to go for the gold rush. I'm going to go for the picks, right? And so for me, if I'm selling picks to gold miners, that's the batteries and that's the lithium to make the batteries. So for me, when it comes to anything that is the EV sector, what I'm looking at is again ABML, LAC. BB guidance on earnings that they are going to continue to crush it with automated vehicles. Okay, IMVT. Immunovant. Okay, so this is a biostock for autoimmune diseases. So biostocks, guys, for those of you that aren't familiar with the process, when you're looking at a biostock, you go to their website. Most of them will have some kind of a pipeline page. Just click on pipeline, go to it, see where they are. Anything that's not phase 3, I'm not interested. So this would fall under my category of not interested. Yeah, I would expect to see the same thing. Hybrids would be a much better route. And again, you're going to see that from guys like Toyota, Hyundai. You're going to see that from major car manufacturers that already have market share. I don't think you're going to see Fisker taking market share from those manufacturers, especially on a cost basis. Fisker is going to be a luxury purchase, which it may still be profitable. I'm not saying it won't be profitable. Luxury purchases are definitely going to have their space. I just don't. Why is it so up then? Hype. That's what happens. Hype. So they don't have any sales currently, which means that they're running completely off of hype. So when we go to Credit Suisse cut them because their phase 2 has been paused. They started their Immunovant priced their stock offering at $33. It's degradation. Look. So September 2020, $33. It's a new bio stock. So it ran up. Right here is where they announced their phase 2 trial is being put on pause. And now this will continue to degrade until they get positive news. I wouldn't go anywhere near it. Fountainhead, no. I stopped doing the 4 a.m. stream. My stream is 9 a.m. until usually 10:30, 11. And then I pass it on over to Martini typically, but Martini is away this week, or at least today. So this is biodegradation, guys. This is I would degradation. I'm not going to go anywhere near that.
Oh yeah, millennial. So I was going through some of Andrew Lowe's the stuff that Rita suggested. The
Adaptive market theory, love it.
Yeah. So he was talking about the S&P and like how if he had 100 stocks, to equally weight it all with $100, you had to give each stock about $1 and stuff like that, and that became like a pain in the ass and stuff like that. Whereas when they switched the S&P thing to being market cap weighted, it became a lot easier to rebalance because obviously some stocks will perform and some won't, right? So his whole thing was that to keep the weighting, or sorry, the S&P thing was to keep the weighting was that for the stocks that do well, you trim those positions to bring down the weighting, and then you redistribute it to other plays
Right. You
that have
reward the
potential.
poor performers to keep the balance.
Yeah. So I'm just like, so I was kind of laughing because I told Dorito, I was just like, I didn't even realize this, but I was actually kind of taught this unknowingly because you know how like my whole thing is that like when something runs about 100%, I emphasize taking 50% off to essentially quote unquote pay for the trade, and then you redistribute that capital towards something else. Yeah, it's almost like almost mirroring that sentiment of how they essentially manage this stuff.
Yeah, Fountainhead, I start every morning a little bit after 9 o'clock. As soon as I get off of Stocky's call, so like 9:05, 9:10, I usually start. But yeah, guys, what the adaptive market theory, that's one of the books that is in the reading list. Andrew Lowe's book is in there. If you haven't read it, I highly recommend it. It flies in the face of the efficient market theory. What do they call it? Efficient market
Theory, yeah.
Yeah, efficient market theories. Guys, there are two big advocates. Well, there's four advocates that I know that are opposed to efficient market theory. First and foremost is Warren Buffett. He thinks the efficient market theory is a complete farce. To think that the market acts logically, I don't know how anybody over the last 2 years can still hold to efficient market theory, given what we've seen. Following Buffett, Andrew Lowe is another one. He's an MIT professor. Absolutely amazing guy, wicked smart dude, but he points out very clearly how the market does not react in a logical, calm, collected manner. It is completely erratic. Fountainhead, what? Sub in, love it. The other advocates against efficient market theory are myself. My entire trading methodology is based around the fact that there is no efficient market theory. And I've been quite successful off of that. And Martini is also a firm advocate of the adaptive market theory as opposed to the efficient market theory.
I'm not an advocate of the efficient market theory. I was never taught that way. The way I was taught was that if the markets were efficient, like obviously the theory is that, or the argument is that if the markets were that efficient, everything right now is completely and accurately priced. There's nothing to underprice, so you will never make any more money than you already have currently. And if you guys have ever read a book, say like Confessions of an Economic Hitman, you'll know that that thing literally fucks over the efficient market theory, because efficient market theory would dictate, well, based on the weather and all that sort of stuff, we expect the crop yields to be X amount, right? And therefore the price of wheat will be, or sugar will be like, XYZ or some shit. But then you got people like Goldman Sachs who take that efficient market theory and artificially manipulate it to the point where they buy up and burn crop fields, or this is kind of like economic terror, but they cause essentially economic terror or artificial supply shortages, which shoot the price up. And that's not an efficient market, because it's not like that supply disappeared or anything like that. It's just it's an artificially created event, but it's something that what was it? Efficient market theory can't really explain. It doesn't account for that. I'm going through their course through Andrew's course right now on edX. It's free. Fergent. Apparently you can get a license thing from it, but I don't care enough to really go pursue any of that shit.
Yeah. Thankfully, I am slightly retired. What Andrew videos would I recommend first? Hold on. This is an easy one. There is a talk that he does. Andrew Lowe, Google Bots. This one here.
There's a part where there's a part where there's like 2 rules that he posts about, and that that he talks about, and then he just ends that part of the lecture by saying and those 2 things are all that Buffett does.
Again, okay, so guys, Clover Health. A lot of people are asking about Clover Health. I was so bullish on it. Why am I not so bullish on it? Am I still bullish on it? Am I bearish on it? I am bullish on it. So guys, Stimulus is coming through. Let's talk about the major parts of the platform that Biden was elected on, okay? Throw them out in chat. What were the big things people voted Biden into office to do? Health, Biden care, right? Or Obamacare. That was one of the major parts of his platform. Another one. Green energy, stimulus, COVID, BLM, weed. Those were the ones. Those 6. That was his platform in a nutshell. You didn't have to watch a single debate. Weed, healthcare, stimulus, immigration, COVID. Give me my stimmy. Yeah, green energy, eco energy, the new Green Deal or Biden's Green Deal or whatever the hell he wants to call it, right? Bombing Syria. I don't think that's what they got voted in for, but he had to do that. So, right, he's taking his sweet ass time with healthcare, and I agree, but that is coming. That's part of his mandate. That's what he's trying to fix. So, when Biden care comes into place, what do you think happens to Clover Health? Let's see. Where do the analysts have it? And I'm not saying that you should always go by what the analysts have to say, but I mean, for me, guys, I've got Clover at $30. Analysts have it at 19 on the high, 15 on the low, 17 on average. Like I'm thinking like $30 is where I'm at on it. I think Clover Health is gonna go. It's gonna go. So then it's at $9. Okay. Like, don't care. Oscar Health IPO, I haven't looked at it. I couldn't tell you. Okay. So Biden care is the only thing I really have to say to Clove. ATRS. Again, guys, Terrace Pharma. Tokis, thank you, thank you, thank you. In my opinion, is gonna go on Biden care. It's just a question of when we get around to it, right? Just like, okay, when Biden actually legalizes pot federally, what do you guys think is going to happen to pot stocks? Come on. Like, right now we're talking stimulus, and that's why the focus is on stimulus and stimmy checks and where that's going to go. But as soon as we move past stimmy checks, the next thing people are going to look at is when's pot going to legal, when's the EV going to happen, right? Like, when's healthcare coming? Those are the next things that are going to be here.
And where's my $15 an hour thing?
Yeah, maybe the $15 an hour thing, but that's ultimately going to be bad for the market. So, do I let trades run or do you have a target out? I'm really ambiguous, Fountainhead. I don't set firm targets. I just kind of get out whenever I get out, which drives people nuts. Where I'm like, oh yeah, this is a Q4 hold for me, and then the next day they show up and I've sold it. So he won't legalize it. He may decriminalize it. What I'm talking about when I say legalize it is the SAFE Act to allowing pot companies to hold bank accounts, get loans, asset management inside of financial institutions, and then the deregulating it from a class 1 to a class 3, so that it can be used for recreational purposes and it can be transported across state lines. Yeah, and I do appreciate that, Chair. People have to make their own decisions on that, but for me, I'm not currently in Clove. I got out a little while back. However, I do still think that it is a massive thing. GoPro, for example, yeah, Lucas over on YouTube is like, what about your GoPro position? Yeah, exactly. Mara, right? Mara was a Q4 hold for me, and I've been out of that for a hot minute. Again, guys, this is a biostock in Terrace Pharma. They've got their earnings coming up. That's going to be really irrelevant. Please don't be suckered by earnings. What you want to do is look at what they've got here. They do have marketed drugs, so there are 5, 6 marketed drugs that they have with different designations. Their medicines target. Okay, so these are testosterone injectors. So this is a very small market. This is testosterone deficient men. Yeah, this is testosterone deficient men. This is a baby boomer play. What they're hoping is as people get older and men still want to get it up, that they're going to buy these auto injectors. In my mind, if I have to choose between taking a little blue pill or injecting myself, I'm going to take that little blue pill every time. And trans men. But again, 0.42% of US adults identify as transgender. So that's men and women. Very, very, very small percentage. This is not a moneymaker. Yeah, very small. It's a growing market. I mean, sure. Knowing that there is a potential cure for HIV or diabetes coming out in the next year and a half, 2 years, I'd be more focused there. So for me, like something like this, I would do GenPress. PDAC is next. I'm going to try to get through this here, guys. I typically do lunch with my fan jam at around 11. So Peridot Acquisition, this is another SPAC. Battery Recycler, so I like this. This is battery recycling. I like the model. It's a good idea. I put this right up there with stocks like ABML and LAC. SE. Overall testosterone was going down. I got plenty to go around. C Limited. This is way outside my price range, guys, but with C Limited, what we're looking at is e-commerce, digital finance service business, Southeast Asia, Latin America. Garena, I am familiar with. PC gaming, esports. So they're kind of doing a lot of everything. E-commerce, digital money. I imagine they'll touch crypto. They're forecasting massive growth from 2 billion to almost 7 billion by December 21. It's a lot of growth potential here. Might be a great leap on an options play. Obviously, I would not play this on equity. I don't play the gaming sector, so I don't have something else to offer you guys. As far as the e-commerce goes, I don't have anything that I play on e-commerce specifically. And then for Bitcoin, Hut is the one that I'm currently looking at for Bitcoin. So it's cheaper than Shopify. Yeah, I guess. I guess that could be the thing. Plug again, guys. This is ePower for me. Fuel Cell is the one that I'm watching. That's the equivalent to Plug. IDEX, guys. IDEX. Ideanomics. Low cost, MEGs, Q4 sales activity, heavily short GameStop, Bed Bath Beyond. Commercial electric vehicles. So this is another EV play. Again, guys. ABML, LAC, HYB. This is not saying why options rather than equity specifically in this case, because I can't get the volume that I wanted of a $300 stock or a $250 stock with SE Bankminster. That's because all the big US specific ones are OTC, and people are hesitant about trading OTCs. So the only ones that you can actively trade on the markets are Canadian ones because they have actual bank accounts and can file with financial institutions for loans and capital. Once that changes, once it gets deregulated, then the US stocks will fly. Wolf of Weed Street, if you guys aren't following him over on Twitter, I highly recommend that you do. This guy knows what he's talking about when it comes to pot stocks. Check it out. If you're not following him, you should be if you're considering pot stocks. But yeah. Okay. New America High Income Fund. Close-ended fixed income mutual fund. I wouldn't go anywhere near mutual funds, bonds, treasuries. I'm not going anywhere near that stuff. Staying away. Nope, 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 nope. Do your own duty. Pick individual stocks. Don't trust somebody else to do it for you unless you're seeking the help of a financial professional. And even when you're seeking a financial professional, if they try to suggest to you a mutual fund that over the last 10 years has provided a net loss of 1.6%, go seek out another financial professional. This is a very poor performing fund. I don't recommend that you take a look at it. Please do not go near it. Warning, warning, warning. I would label this one as dog shit, and not the good kind that I like to trade. Okay, HAS, Hasbro. I'm bullish. I'm bullish on Hasbro. I like Mattel better of the two. Mattel has the Disney licensing for their superheroes, which is going to be big. They're much more affordable at $20. I think Mattel has a really, really solid gain. Now, they are down massively over the 10 years. The highest they came was near 50. I think that they've got a lot of recovery to do, upwards to 40. There could be about 100% gain on that. So, I don't hate Hasbro. I think toys are going to be big, especially with the stimulus check, but I definitely like Mattel better. Galaxy, I assume that this is something space related. GLXY is not coming up here. Okay, Galaxy Digital Holdings. Asset management firm, blockchain, digital, crypto. So it's a crypto play. I like Hut better. If it's a Canadian hit. This is a Canadian. I like Hut better. A firm. A firm is just a super strong play, guys, long term. This is where medical is going to go. You thought Hasbro had Disney? No. Well, they might have Disney, but Mattel has the Marvel line. Mattel has all the Marvel stuff. Any thoughts on why mutual funds do worse? Because mutual funds are what you sell to old people when they don't want to be bothered with managing their portfolio, but want to tell people that they're in the market. They're not well managed actively. I would rather people take a look at an ETF over it. But honestly, guys, when you're looking at a fund, so regardless of what mutual fund it is, take your pick, right? But what is the cardinal rule when it comes to your trading strategy? What is the metric you are trying to beat? Huge thank you, by the way, to all you new followers, guys. Let me know who you are, what you trade, how you found the stream. I want to know who you guys are and actually help you out with your trading. I don't want you guys to just lurk. I want you to learn. I want to be able to help you. So the number one thing that we are trying to beat, that doesn't mean anything. Turtle Trading is another book that I've got on my reading list. Turtle Trading trades on the concept that if something's at a 52-week high, it's more than likely going to continue gaining. So they actually consider holding that because it's going to keep going. What was the list you were making? Sympathy plays? No. The list I'm making are tickers that the stream shouts out every morning. I go through the entire list before I get out of here, and I give you my insights on what it is. If it's a play that I like, I leave it on the list. If it's a play that I have a sympathy play or a like play that I already am playing in the sector or a similar sector, I let people know that's what I'm playing. But with the fun, guys, what you should be trying to do every year with your portfolio is beat the SPY. Did you beat the SPY? Subscribers at the end of the month, I send out the entire Evernote thing. My entire trading journal goes out to all subscribers at the end of the month. I send out an email to every single subscriber, and you get access to my trading journal. Galaxy, yeah, but at the price of double. So for me, I would take the other side. Chia Dog, what? Thank you. 4 months in a row. Let's go. Very cool, man. It's good that you've analyzed. You've been able to figure out what you're doing wasn't working. Prime Gaming sub. You could have given it to anybody. You gave it to me. You're a madman. Thank you. That's a great place to start, in my opinion, Neural. That reading list, there's tons of stuff on there that'll help you craft a really solid trading methodology. And that's high praise, Fountainhead. There are a lot of wicked smart people out there. I've only been at this a year and a half, guys, so just keep that in mind. And we are on a hype train. You guys rock. So always, please keep in mind, ladies and gentlemen, whatever trading strategy you're doing, if you're not beating the SPY, you should probably just look at putting your money in the SPY. It's that simple. If you didn't beat the SPY last year, who here had more than 25% gains in their portfolio? Whatever you did, you were doing it right. Okay? Huge thank you, guys. The follows, the subs, you guys are amazing. Thank you, thank you, thank you, thank you, thank you. But if you didn't beat the SPY, you should probably just trade the SPY. You beat SPY by 4%, keep doing what you're doing. It's that simple. I took 2,700% last year, so I'm probably going to stay out of the SPY. Already this year, I am up damn near 100%. I could stop today and I would be fine. Pumped, and that's important. That's part of a trading methodology, is acknowledging the fact I don't have the time to actively be trading my portfolio and doing the DD. So I am going to hold these ETFs. That's fine. I think that's a really smart way to go about it. Chem Life, I know that a lot of people get into financials and people hate it when I say, oh, but market cap doesn't matter to me. I know it drives people nuts. I know, I get it. But for me, I'm looking at the sizing that I'm able to take and the appreciating assets. So for me, I think that HUT at $10 is more likely to move $5 than Galaxy is at 20 to move 10. Yeah, options can be interesting. I almost blew up my options account. I started with $500. It went all the way down to 100. Now it's worth a little over $3,000 and growing. But again, I had to come up with a different trading methodology for my options as well, where I play my options like a long-term hold equity portfolio, essentially. Anything that I can't afford that's outside my price range that I'm very, very committed, I think it's going to have that movement on, I take a long-term hold on, or a long-term call on. So you'll see when it pop up my options portfolio here. I'm taking leaps on CCL. I see CCL recovering. I see SNDL doing quite well. SABR is for the travel sector. I see that doing quite well. GameStop puts. I think GameStop is going to decline. I don't know if it's going to come down to 7, but I think it's going to come down. Coke. I think Coke is just a really solid long-term play. This is more of a tip of the hat to Warren Buffett, but I think Coke is going to announce CBD beverages sometime in the next 6 months. So that should help it rally back up to that $60 mark, in my opinion. So that's kind of where I'm at with my options. Long term, long term. And I know that's really boring for a lot of people, but TD Ameritrade, no. TD Canada. Options, that's Interactive Brokers, IBKR. Okay, we're almost through the list here, guys, and then I'm going to go do lunch with the Fam Jam. Affirm, it's Peter Thiel. It's the future of medicine. I like it. I'm bullish on it as a long-term hold. I don't actively trade it, but I am bullish on it. Sens. This is one of those hype stock guys, Sensonomics or Sensionics. Glucose monitoring. So this is for diabetes. The reason why I don't like Sens, guys, is because I have seen several companies that are talking about curing diabetes. Genprex being the biggest one, GNPX. I think it's GNPX. Yeah, Genprex. This is a cure for type 1 and type 2 diabetes. So for me, this negates Sensonomics. This would be the one that I play. Cure for type 1 diabetes is pretty crazy. CRSP, guys. CRISPR Therapeutics. This is gene therapy, guys. Gene therapy is absolutely massive. Absolutely massive. What I don't like about CRISPR, guys, is it's based out of Switzerland. It's a European company. Their forecasted revenue is relatively small over the next 2 years. There is some level of growth. They made $289 million because of COVID, but they are being realistic in their growth expectations following COVID. They're not seeing these massive potential gains post-COVID, so just be aware of that. But yeah, there's lots of other plays in the sector, but gene therapy is a very strong sector. It's a long-term hold over the next 5 to 10 years. So be aware of that, guys. There's a lot of opportunity there. Yeah, that's just type 2 diabetes, Fountainhead. They are talking about curing type 1 diabetes. They have shown evidence they can do that. So affirmed there will be 15.6 million more shares. Yeah, the lockup is done for sure. So good morning, good morning, good morning. So CRISPR's gene therapy, I don't hate it. I just am not looking at it currently. It's all. And if I was to do gene therapy, I'd take something in the US, not something from Europe. SDC is the last one for today, guys, and then we're gonna head out of here. Smile Direct, love it. I love Smile Direct Club. I think this is great. And again, this is a healthcare play. It's in a decent position. I think Smile Direct Club has the ability to go to about $20, so it's a good double up opportunity, in my opinion. Dental is just going to do well. I like it. It's dental into healthcare spending. I like it. I just like it. I'm bullish on that industry as a whole. So if you're not following, guys, go ahead and follow now. I am back 9 a.m. tomorrow. I know it's F Wednesday, but I am still going to come back. I am going to hang out with you guys. I probably won't be taking any trades because all my money's locked in, but I will be back tomorrow. I will hang out with you guys. I will go through the list. We'll watch the insanity that is. I will catch you guys tomorrow morning, first thing. For now, I don't see Rita live, so let's go. Let's go hang out with Stocky and drop the beaver in there if you've got it, all right? He loves the beaver. Loves it. And we are out of here in 3, 2, 1.